Hello and welcome to Ask Bellco. In this episode, we will discuss investment and retirement planning in today's uncertain environment. And joining us to talk about it is Billy Cassidy. He's Executive Financial Advisor for CUSO Financial Services, LP. Billy, welcome to the show.
Thank you for having me.
It's great to see you. CUSO, what does that stand for?
That stands for Credit Union Service Organization.
That's pretty straightforward.
Credit
Union Service Organization. Okay, great. So Bellco, from what I understand, has contracted with CUSO Financial Services to provide members investment management and retirement planning services. I have to say, I have been hosting the show for a while, and I feel like Bellco members have a lot of options when it comes to that. A lot of partnerships out there. So why CUSO? What makes you guys unique?
Very good question. So I think the first thing is probably that CUSO is an independent broker-dealer, which means to the investor and for the advisor, there's not proprietary investment products that I have to use when I'm doing a financial plan or an investment plan or a retirement plan for one of our Bellco members.
Okay, so let's slow that down just a second. So the idea is that with other investment planners or something, you might walk in to get advice, but they are required as part of their job to maybe sell you a certain type of investment or something like that. Do I have that right?
That's exactly right. You can be captive to the company that you work for, so you're going to utilize that company's products when you're implementing a plan, and we don't have those restrictions.
Oh, that seems like it must be really great for you. And you don't. I almost feel like if you were I like what you said about captive. It almost feels like you'd be playing with a hand behind your back if you were kind of trapped in one of those things. Okay, so let's talk about the market just a little bit. We're a couple months past midterm elections as we record this, and I feel like the market's been pretty good for 8 years, 9 years, but there has been some changes, a little bit of fluctuation, and it's like the Dylan song, like the times are always changing. But how does a person decide to invest or plan for retirement during changing times?
Well, I think the first thing is starting out with a thorough understanding of a client's risk comfort level, their goals, their objectives, what are their assets they're utilizing with their investment plan, whether that be their 401k, their IRAs, or their non-qualified investment accounts, and making sure that those are allocated appropriately according to those components, and also that they're diversified, they're resilient, especially in this type of market environment where we're seeing lots of fluctuations. And then matching strategies or a strategy that fits those different objectives inside their plan.
So it kind of sounds like every customer might be a little bit different. And there's a lot of really kind of looking at what this particular person's needs are and how we're going to meet them. Do I have that kind of right?
Yeah, that's very accurate. Everybody's going to be a little bit different. Some people are very conservative and they may want products that protect the principal and there's no chance for loss. And then we might have somebody else who is very aggressive, and that's what they're looking for, is the most growth that they can possibly attain. So I have the ability to go out into the marketplace and find those strategies that fit each person.
And that's what you were talking about when you were saying, I think you said risk comfort level. Is that where people are kind of more bullish about it, or more, like you said, people who just want to protect the principal? That's your risk comfort level. Do I have that right?
That's exactly right.
Okay, great.
Everybody's going to be a little bit different.
Okay. Well, I feel like whether you're the kind of person who plays the stock market or you're just the kind of person who maybe has like a 401k or retirement account, those fluctuations in the market can be really scary. Or especially when you open up your 401k and you maybe see that it's dipped, or you see a bit of it. That's a bit of like an emotional roller coaster. So how do you help people go through that kind of emotional connection to their money?
Well, that's a very good point. I think often, and there's been studies made, but people will make financial decisions, very important financial decisions, based on emotions.
Yeah.
And the two emotions that come forward in those decision-making processes are fear and greed. So when the market's fluctuating, going up and down, a lot of fear will occur, and they'll make the worst possible decision at the worst possible time.
Oh.
So an advisor, I want to make sure that I'm keeping those clients engaged in their long-term plan and not having a decision that really could ruin their retirement plan.
Yeah, so it sounds like kind of maybe part of your job is to kind of just talk people down a little bit, or maybe talk them up depending on the circumstances.
It's very much a consultative approach, and making sure that we're monitoring their plan on an annual or biannual basis at least, meeting with them to make sure that all those goals are being met, and the plan is working effectively.
Okay, I'm gonna come back on a couple of points that you touched on that I thought were interesting. You mentioned having a plan that's resilient, but can also kind of capitalize on market growth. Can you give us some examples of that?
Sure. What I mean by resilient is that if we implement a plan, and we'll often use a bucket approach where we might have different strategies inside 2 or 3 different buckets.
Okay,
so,
and what do you mean when you say buckets?
Well,
and that can't be like actual payoffs.
Not
right?
actual buckets,
okay.
but one set of assets might be in a bucket that's designed for 1 to 5 years out.
Oh.
Another one's designed for 5 to 10 years. Another one's designed for 10 plus years for late life.
That sounds really smart.
Yeah, it's a nice way to segment your assets, but also to build a resilient plan, like you mentioned. So some of those assets or some of those buckets might be principally protected strategies. Mm-hmm. Some might be FDIC insured, and the long-term bucket might be something that's designed for late life income.
Yeah. Oh, okay. Late life income. That's fascinating. So it kind of sounds like retirement planning is a big part of what you guys do for Bellco members. But I know for a lot of people, they're just like, oh, yeah, I got a 401k. I don't really want to mess around in the market. I'll just do that. Or I got an IRA or something like that. So how do those accounts fit into your planning process?
Well, often we'll see people that have old 401ks that we can help them with. They're not always sure about what their options are with those old 401ks. Mm-hmm. Current 401ks, we always want to make sure to have a good understanding of how those accounts are invested and how they're allocated. I as an advisor, can't recommend anything to anybody unless I have a pretty good understanding, thorough understanding of what their other assets are, so I'm not duplicating efforts or making a recommendation that's not suitable given all the other assets that they have.
Yeah. Well, we were talking a little bit before the camera started rolling, and you were saying that you run into people who don't really know what's in their 401k or haven't looked at it in a long time. So I guess this is not on the script, but how often should we look at our 401k, make changes to it, check on it, things like that?
Well, that's a good question. I meet with people that are looking at their 401k statement or their IRA statements far too often, literally daily online. Ooh. That's way too often, because that'll drive you crazy when you see the markets fluctuate.
Yeah.
And then others that have, like I said, old 401ks that they haven't looked at for years, or even current 401ks, they might have taken an online questionnaire to see how they should allocate their 401k, and they haven't touched it since. Mm-hmm. Their lives have changed over the years. The market certainly has changed. So reviewing those assets and making sure that they're allocated according to where that person sits now financially is critical.
Okay. So what, maybe annually, every 6 months, somewhere in there?
At least annually. Often I'll meet with clients biannually and then have a phone consultation quarterly.
Oh, that's nice. Yeah.
So communication with your advisor, I think, is critical.
Mm-hmm. And what kind of things, if I'm out looking for an advisor, what kind of questions should I be asking an advisor when I'm seeing if that's the person I want to work with?
Well, that's another great question. I think that the general investing public has some fear about meeting with financial advisors.
Well, there's just so much jargon, and there's so much, I don't want to look stupid. What if I ask the wrong question? I feel like that's what intimidates a lot of this stuff for me anyway.
I agree with you. That's the main point, is people don't want to feel silly when they're asking certain questions. So some basic questions I would recommend people ask is, how is the advisor compensated? Okay. Because advisors want to make their income as well. Is the advisor a fiduciary advisor? And if you don't know what that is, that basically means, I know you know what that is, but if the investment public doesn't know what that is the advisor must make recommendations that are in your best interest above his own.
Oh, okay.
His or her own. So a fiduciary advisor, and then also once a strategy is implemented, I think the investor should know some basic components. What are they investing in, and why? Is it working? And really, how much they're paying for it.
Right,
they should know. And that's one of the questions people don't want to ask is, how do you get paid and what's this costing me? That's a very fair question. There's no other industry where you wouldn't ask how much you're paying for something, but you deserve to be able to ask that.
I suppose that's true. That there aren't very many other industries where you would feel uncomfortable asking that. So take that to heart, folks. Get in there and ask them those questions. I feel like we've spent a lot of time talking about planning for retirement and also investing, kind of managing all of your assets. But let's say that I just got an inheritance, or maybe I finally landed that Powerball and I have a lump of money that maybe I want to invest. Do you guys do that kind of stuff too?
Absolutely. That's a big part of what we do as well. Like you said, a windfall or something along those lines. Maybe it's a life insurance proceeds. Or maybe it's something as simple as they have too much cash at Bellco or a CD that's not yielding them the kind of growth and yield that they would like. We'll often just reposition those assets into a more favorable situation for them. And often the planning process comes later in the relationship as well.
Oh, sure. So it's like you're taking the things they already have and just moving them around to grow that wealth a little bit more.
Right. Sometimes there's an immediate need. I've just been laid off. I have an old 401k. How can you help me with that? I have this CD that's not doing what I thought it was going to do. Can you help me with that?
Sure.
So sometimes it's transactional to start the relationship, and then, like I said, the planning can come later.
So it doesn't have to all be done in a day.
That's
right. What you're saying. Well, I know who I'm going to come and talk to if I want investment planning services or retirement planning services. Any last kind of tips or thoughts for the folks at home?
I would just reiterate that go out and research and look for 2 or 3 advisors that you've researched and
shop around
and vetted, shop around, and ask those questions. Are you a fiduciary? How do you get compensated? What other investment companies do you work with? Make sure they have a broad product selection that they can choose from for you on your behalf, and then feel comfortable about who you're dealing with.
Yeah, don't be afraid to ask questions and come in informed. Basically,
that's right.
Is what well, thank you so much for joining us. Will you come back and see us sometime?
Absolutely.
All right, thanks, Billy. Appreciate it. And thank you for tuning in. Be sure to come back next month. We're going to discuss talking to your kids about money. So check that out. We'll see you then.